All right, we begin here in Nigeria. Central Bank has called on banks to inform them that the foreign exchange rate cap has been removed at the investors and exporters window, the INE window. Hence, banks and customers or participants in the window are allowed to trade freely at any rate subject to a Naira spread between the buyer and the seller. About to jump into this now. We have, of course, Arise business analyst Bode Oshosumi, who is with us in London, here in Nigeria. Joshua Odebisi, who's a senior research analyst with Rand Merchant Bank Nigeria. Thank you both for joining us. Bode, let's start with you. What are your thoughts on, I guess, the implications of the beginning of the process of floating the Naira? You know, why wasn't this done earlier, as been asked several times?
Well, it certainly was not because analysts and many people were not advocating it. Most of the things that we're seeing in the last 2 weeks, my recollection is that we've been repeating, asking for them, but obviously analysts were derided, and we had what we eventually had in the last few years. Local banks are now being told that going forward, the exchange rate will be determined through supply and demand rather than by the central bank. And you could say that, yes, we are at the beginning of floating the currency after years of sticking with the cap that encouraged capital flight, arbitrage, widespread corruption that spooked investors and drained dollars from the economy. And in the past, let me just give an example. Investors who had to source funding from parallel markets under accounting rules have to account based on official rates. So the damage to competitiveness at a time when other countries are de-risking and reforming the business environment to woo investors was immeasurable. So I think this is a game changer. And my understanding, the advisor to the President, Wale Edun, he told Bloomberg in an interview that unification of the exchange rate would be achieved within the quarter. Now it's looking like it could be even sooner or more imminent. But this is not going to be easy. There will be an initial pressure on prices, especially with when combined with the removal of full subsidies. There's an increased urgency to deploy targeted palliatives and social welfare interventions as inflation spikes. But looking at NGX, that's the ETF. It's been climbing today again, which just tells you that the markets really were waiting for Nigeria to just get it right. I was looking at the Global X MSC on the New York Stock Exchange. It's up 12.23%, 12.23%. That's Nigerian ETF. That means investors have just been waiting to get it right. Why didn't we do it earlier? Let me just give three reasons. One, of course, fear of further inflationary spike. The times are difficult, of course. Supply chain issues, security, COVID. Adding this to it may have spooked the policymakers. The other thing, of course, there are allegations that there are interests benefiting extensively from the arbitrage at every point in the value chain for buying and selling FX. And, of course, the lack of courage at the highest level of leadership is very important. I think courage also comes with depth and understanding and stamina to take tough decisions based on strong conviction. Somehow that also wasn't there. And the voices that were asking for this repeatedly were just drowned off and derided.
Thank you so much, Bode. Joshua, let me come to you. Let's start with the banks, right? The capital adequacy ratios for the banks. I want us to jump into that if we can. How do you see that playing out with respect to how this is going to impact them with what they hold on their books, Joshua?
Right. Okay. So the thing is, obviously, devaluation of this size, we're not exactly sure where the market will settle today, but it's looking like something like a 28% devaluation at the moment. But what that means is that banks that are carrying, on average, about 40-45% foreign currency on their books will see the value of those loans basically inflate in Naira terms, which means that their risk-weighted assets will increase significantly. So that means that capital adequacy will probably fall quite significantly.
Okay.
Yeah. So that's where we're looking.
Now,
at.
But on the flip side, the assets that you're talking about in terms of dollar assets, those, as far as the valuations, that's going to go up because of the rate moving.
Yes. So it's on two sides. So on the one side, obviously the bank's assets will increase because obviously if they had dollar-based assets on their books, the value of those assets in Naira will increase significantly. So banks' balance sheets will grow. Unfortunately, what that means is that they're going to have to allocate more capital to keep the capital adequacy ratio above 15%. Now, most of the banks are still above 15%, but a lot of them are getting dangerously close to that limit, and so they're probably going to have to recapitalize or do something to shift back to more stable ground.
Gotcha. Buddy, back to you. What are the lessons from other African countries like Egypt, where the exchange rate was floated?
Well, I just wanted to comment on the banks first before we talk about Egypt. Indeed, the smarter banks would have only been exposed to companies that have dollar revenues, so that they can, of course, be able to fund whatever exposures they have also in dollars. So if you have a dollar exposure on your balance sheet and you are really relying on Naira, then I think the bank that extended that loan deserves what it gets. But to Egypt, I was just looking at the experience there in 2016, 3rd of November to precise, they floated their currency. It wasn't easy, and that's why I say this is not going to be a sprint. Inflation was 10% in 2016. It rose to 34% in 2017, 3-4, and then it came down to 5% in 2019. Now, with some of the COVID-related supply chain issues, there have been challenges. It spiked again to 30%. So this is no magic pill. And I think it's important that we note that. It has to come with reform in so many other sectors. Perhaps the most important is to expand the supply, get confidence, get liquidity to return to market, get rid of all these capital controls that spooked investors, and eliminate the need for shadow windows, especially as we've seen of recent. Eventually, there will be a stabilization after the ripples and initial panic settles. But I'm not sure we're going to do so much better than Egypt. Egypt in the end had to go to the IMF. They are still in the process. And we also have to look at this as a long-term process. It's easy to damage an economy, to bring it back to where it needs to be and put it back on a strong footing. Requires a lot of discipline, a lot of stamina, a lot of reform, staying the course. So this is not a 1 week, 2 week announcement type thing. It's something that's going to take years. And one, of course, expects that the new economic team are up to the task. But one thing that you will also get is bona fide players, people that have funds that want to come into Nigeria to play on a very professional front, no corruption, no arbitrageurs. They would come into the market, and there's a lot of capital that is looking for environments like Nigeria to get it right. So it will be difficult to estimate the improvements we'll see in eventual supply and liquidity. But I think this is something that is exciting. We've been waiting for it. And just like I said, NGX ETF as we speak, that's the Nigeria ETF in New York, is up 12.23%. That just tells you how excited investors are about the announcement.
Indeed. Also, the NGX as well, 3.13% gain now. You think year to date, we're up 17%, 2-day bull run that we've seen here. Thank you, buddy. Joshua, let me come back to you. What happens to the black market now?
Well, again, it depends on where the official market settles, but also on what kind of supply levels we see. Of course, this may cause a little bit of a frantic dash because people who are maybe speculators who are maybe holding onto some of the dollars might come out into the market and try and sell because they believe that this will cause a drop in that market. So potentially we may see increased supplies there. But I think that's all short term. In the longer term, what this means is that we'll probably see a lot more supply in the official market, which will trickle into the economy and which will probably affect the black market and probably see those prices come down as well, which would be what they call the homogenization of the currency.
But as far as the short-term inflationary impact, did you say we're going to see a repeat of what happened in Egypt, at least within the short term, looking at inflation?
Well, I think we certainly will see an impact on inflation. I can't tell you how high it will go, but it certainly can come down pretty quickly. Like I said, within a year, Egypt went from 10 to 30 and came down to 5 in around a year and a half or so. So you definitely are going to see a bit of that. But also remember that as you get supply, and supply is very important, liquidity, supply, and if you really know how to bring supply into the equation, then of course, why are people going to parallel markets? Because you banned X, you banned Y. And then if you can't get it officially because it's banned, you go to the parallel market to get it. So if you make the need to go to the parallel market unnecessary, you will see people will come into more people will come into the official market. There will be the official market will have much better confidence. And the NGE, not the NGX, NG that I said is up 12.23%, is an ETF that focuses on many of these companies: Dangote, Guaranty Trust, Zenith Bank, FBN Holdings, Nestle. Many of these companies obviously will now see the advantage of exports, and we just can't emphasize the importance of non-oil exports in the equation for recovery for Nigeria. So there are so many angles to this, but on inflation, let's just say it's going to be tough before it gets better.
All right, Joshua, I agree. What's the look on the short-term inflationary effects of this move?
Well, obviously, there will be a little bit of a spike, I think, in reaction. But like you said, I do expect that following the Egyptian model, it should start to moderate as time goes on.
One of the fears, at least why the central bank was always continue to participate in the market, was this talk of speculators, right? What do we probably see? I mean, if you're taking the handbrake off, do we probably see speculators having a free reign in the meantime, in the short term, with respect to the rates, so like a big spike?
Well, the thing is, I think the way speculators were operating within the market was more down to the fact that there was such a wide spread between the official rate, in quotes, and the black market rate. Now, if you take away that spread or you reduce it significantly, then speculators will be working with much smaller margins, and they probably won't have such an outsized impact on the rates that you see in either market. Because again, the reason why, like he said, we saw significant demand in the black market because there was the list of 42 items that were banned that basically couldn't get FX from official channels. So they had to go to the black market. So there was an increase in demand in that market, which led to the massive spread. But as soon as you get rid of that and people are able to access, foreign currency from their bank, and they don't really need to go and queue up at the CBN anymore, then people who are just going to make petty trades in the black market will sort of reduce significantly and also will take away that avenue for speculation. Now, anybody who wants to speculate or who wants to engage in currency trading will have to do it more at the official market. And so that would effectively, I think, wipe out the advantage or those massive gains that they had seen for the past 2-3 years.
But what do you make of the I think we can call it speed at which the administration has moved that? Because it's 16 days now. They've removed fuel subsidies, removed the central bank governor, signed the Student Loan Act, and now the exchange rate, liberalized the exchange rate. What is there something to be said with the pace at which this, and we don't even have a cabinet yet. So what do you make of the pace at which the administration has moved that?
Well, Rotus, I'm not a praise singer. I have to wait to see what all this means. Announcements are one thing. Certainly, this is a game changer, the one we just had today. But so many other things go with it. The institutional reforms, process reforms, capital controls reforms. There's a lot that goes into this. It's not just making an announcement and sending out a memo to banks. So I would just hold my if you like, judgments until we've had time to watch this. My own advice to the government is not to expect this to be easy, because this is a huge economy. We know it really has been damaged for a long time through these bad policies. It will take a while before we get the restoration, and they just have to keep at it. When we do see some inflation, which may not be as bad, just like we heard, speculators will exit the market because there's going to be no motivation. The margins are not just going to be there. So I think we should just wait, ensure that the other process aspects of the reform are also put in place so we de-risk the environment completely, and then of course we learn from other economies. But definitely markets are applauding this already, and one has no choice but to say that the pace is admirable.
All right, thanks for that, buddy. Joshua, you know what? Would like for both of you to opine on this. One of the things the president mentioned at his inauguration was that he wanted interest rates to come down. This is on the borrowing side. Now, there's something to be said, I guess, for the cost of doing business, for banks and so on. What would need to happen for interest rates to come down, at least for loans and so on and so forth?
Well, that would then depend on inflation.
Yeah.
Right? So if they do get a handle on inflation and start to see it come down significantly, then they could start to drop interest rates. But until that happens, then there will not be that much of a drop in inflation. Plus, we need to understand that this is all linked to risk. So if the international community or the international market also see that there's lower risk of doing business in Nigeria and are able to come in, and exit freely, borrowing costs will also come down. I mean, in the case of the government trying to access FX on the international market.
Okay, excellent. And in fact, but I think you may have already mentioned this already, but how soon should we expect, I guess, with this signal to foreign investors for them to start coming back into the market? You may have mentioned this earlier in your first answer, but is this signal, of course, how much time frame do we see foreign investors have to come back in portfolio and so on and so forth?
I think the first sign is the appreciation of Nigerian assets, and we're already seeing that in global markets. And of course, the other issues relate more to what is going to change materially. This is just 2 weeks. Nothing really has changed but announcement. But of course, we're going to see the impact of that. How the process is managed is something investors are going to watch. What happens to capital controls is something investors are going to watch. What happens to ease of doing business, ease of bringing your money in and taking it out. There are so many things that come into play apart from what we've seen so far. The only thing I can say for sure that Nigeria is back on the radar. We also need to increase would you call it investor diplomacy? You saw what France is doing, wooing the likes of Elon Musk. We've seen what the US is doing, bringing businesses and trying to lure them to come and do business, to do more business locally. You just have to go out to these businesses and try and get them to see the opportunities in your country, show your wares, bring out the showroom and make the showroom look good, make Nigeria look good. And the president played in a very strong role there is something that I think will also help. So we are just at early stages. So let's give it time. But I'm very optimistic that they will come, but they will not come because of promises and professions.
Okay, excellent. In fact, I would like the both of you to open this. What is the risk of backtracking on this? You can't backtrack, right? Because I think Egypt, this is what happened with Egypt, but when they said they were floating, then there was money show that came back and then they went back and forth and so on. What's the risk here of backtracking on this? You've got to essentially, you've floated it, you can't go back, right? Joshua.
Well, okay, so what I would say is we can look to history to sort of give us an indication of how that could work, because I mean, a few years ago, I think it was maybe if not 2016, then a bit later, maybe 2018, the CBN did come out and say that, now
it's floated. Right.
Yeah, it has been floated. Now, of course, you can say that, right? But if it's not reflected in the market, then what you've said is meaningless. But if we're actually seeing free movement of the currency on a daily basis, then we can say, okay, maybe it's here to stay. Now, if they do backtrack after that, that sends the wrong message out to the market, because that just makes investors more skittish and they will sit back and say, okay, maybe we should hold our horses and observe for a longer period of time. But if this holds out, it will be difficult, of course, and there will be that temptation to be like, maybe we made a mistake. But if they do hold out long enough to see the benefits, I think long term, the benefits will far outweigh any kind of short-term shocks.
Thanks. Buddy, you've talked a lot in the past about policy flip-flops. So I want you to, can you weigh in on this, the risk of backtracking and the consequences?
Well, definitely the risk is there. And I hope there won't be a policy misstep of backtracking, because that will have very severe consequences in my view, because when you are given an opportunity like this, markets are now going to, it will be so difficult to woo them back again because they begin to see this government as unreliable. Now that they have been placed on a pedestal that we hadn't seen before for incoming governments coming to just coming in. We haven't seen these types of upsurge in spikes of valuations of Nigerian assets as a result of a government. So definitely a lot of confidence is now being placed on this government. They're expecting a crack team. If we begin to see flip-flops, I think that will be a colossal disaster. Egypt, I don't think they had flip-flops. Of course, they had to bring in the IMF to have an anchor, because sometimes you do need an affordable anchor, especially so that you can get the depth of funding that you want and give people confidence. And but immediately you get confidence up and people are confident and there are no flip-flops. A lot depends on the economic team. We haven't seen that yet. So, and some of the early moves. So it's too early to answer that question, but flip-flops will be a disaster, especially in the Nigerian context.
Thanks, buddy. Speaking of the Nigerian context, Joshua, has there been, I guess there's been talk about the impact on the average Nigerian. Average Nigerian hasn't been able to access what was the official rate at 471 or so. They've been, patronizing the parallel market all this time. So, is there anything to be said for the impact on average Nigerians at this point? Since, I guess, depending on where the rate moves to, since they were already at the parallel market anyway. Well,
sure, of course. Because the thing is, if it's freer, then that means that the banks will have more discretion about how they are able to sell, foreign currency to their customers. Remember that they had put all these bottlenecks in place, all these things. I mean, the most recent one came out not too long ago about how you need, a tax history.
3-year tax history to access your PTA.
All of that was just done to reduce demand, right? When really what's needed to be done was just fix supply, right? Now, if that happens, if the banks are now able to sell freely to their customers and they do have enough currency coming in that they can do that, then of course it will have an impact on your average Nigerian, because they would now be able to buy foreign currency from their banks and not even have to go to the BDCs to look for at higher rates.
At higher rates, right. But as far as the liquidity is concerned, you mentioned earlier that we need to have, it's very important now that liquidity, comes into the market. You also said we need to be patient. How patient do you think we should be in expecting liquidity to start flowing in? Do we have to give it a little bit more time in terms of reactions to what's been announced today?
Well, I think it's going to be a marathon and not a sprint. That's just the short answer to that question. People are not going to rush money in if they're not sure. We're already talking about flip-flops. There are so many other process interventions and institutional reform aspects that have to be put in place that they'll be watching for. So if we see a slowdown in this type of interventions, and apart from this initial announcement, of course, you won't see as much. But if we do see game change as far as ease of doing business, game change as far as capital controls, we get rid of all these useless bans and so on, you will see money coming in, because there's a lot of capital out there. We review these numbers every day. There's a lot of capital out there looking for where to go. And you don't need to be making too much noise. If you have the right environment, you will get the right capital. The other thing I must mention is that there's an increased urgency, I don't know whether I mentioned it earlier, to deploy targeted palliatives and social welfare interventions, adjust wages appropriately to alleviate the adverse impact of inflation. We just must say that, because inflation can really be very painful, and you can get a social kickback, or what's the word, resistance, where people feel too much pain. So you really need to do something about these palliatives and make sure that the environment is not too difficult for the common Nigerian, even as these reforms get embedded.
Thanks, buddy. Joshua, you get the last word. We're wrapping up. What I guess, what's to come?
What's to come? Exciting times are to come, I think.
Exciting times.
Because, I don't think that this pace of policy and, shotgun decision-making will continue. But I think undoing a lot of the bad decisions of the past will at least get us up to a pretty firm baseline from which we can then build. The truth is that, like you said, there is a lot of capital out there waiting for these kinds of reforms to come into the market. And once you get all the nonsense out of the way, all the terrible decisions that have been taken, you can start to unlock a lot of potential from within the country and from the diaspora and from FPIs as well. So all of that together, I think, makes this very exciting.
Yeah.
Whatever may come.
All right, we'll leave it on that positive note, that exciting note. Joshua Odebisi, Senior Research Analyst, Rand Merchant Bank Nigeria, and of course, Arise Business Analyst Bode Ososumi, who will be back with us after the break, so as we take a look at global news around the world. Thank you both, gentlemen, very much.